I expect a crash. I mean, maybe 80, 90% decline in real estate prices in terms of actual money, real money. The government should have no involvement in real estate. There should be no Fannie Mae, Freddie Mac, FHA. Everything is screwed up. Our money's value has been destroyed, and it's about to be destroyed even faster. It lost 99% of its value in 100 years. It can lose another 99% of its value in 10 years. Prices are going to go up 100 times. So you think stuff is expensive now. Add a couple of zeros. The Bitcoin people think, well, we could just artificially replace gold with a string of numbers and it's going to have value. No, it doesn't. It's just the latest iteration of fool's gold. There's no actual use for Bitcoin. You have to constantly sucker in new people into the pyramid. Eventually, the price has to collapse.
Welcome to part 2 of my interview with Peter Schiff from my visit to Peter's Connecticut home, recorded less than 2 weeks ago. If you haven't seen part 1, the link is pinned below in the comments. Peter Schiff now admits a housing crash of 80 to 90% is possible here in the United States, according to real money terms. Over the last several years, a housing market super bubble was created from unsustainable factors, of which many now believe the chickens have finally come home to roost in what may be the largest financial storm in American history. Now the question becomes, are you ready for the storm? Now let's listen to what Peter Schiff has to say about what he believes is headed our way. You say that, I know when we spoke in November, and I asked you whether you thought we would have another housing market crash, you gave a similar, response that a lot of the equity or a lot of the value of the homeowners right now is the low mortgage rate of, let's just say, under 4%. But when we look at the fact now that mortgage rates have dropped substantially. I mean, you can get in the sixes, in the mid 6%.
But that's still a lot more than 3 to 4.
We've seen a big shift. I mean, we've seen days on market skyrocket, even in Maryland, where we have a great jobs market, a lot of government, but we're seeing a lot of price reductions where we're looking at, Peter, I'm not just talking about one or two houses dropping their price. We're talking about 30%, 35, 40% of the houses on the market now having at least one price reduction.
Yeah, it makes sense because if you need to sell, right? Some people need to sell their home, right? And if you need to sell, well, then you're going to have to cut your price because that's the only way the buyer can afford to pay.
But that's setting new comparables.
Yeah, the market is gradually going down. But if people don't need to sell, see, if you're, even if I've got a house, right, that has gone down in price or in market value, if my mortgage payment is lower than what I would have to pay if I rented a place, then I'm just going to stay in my house. Doesn't really matter to me what the price is.
Well, what about for the baby boomers? I mean, if what we're talking about, the deterioration of the dollar, inflation going up, that means cost of living is going up.
Oh yeah, and home equity goes away. So a lot of people, even though they're living in their house and they've got a low mortgage payment, the fact that they no longer have all this home equity,
their utility costs they can't afford.
Well,
their repair costs.
Home ownership, right? You may have a fixed rate mortgage, and so your mortgage is not going up, but all the other costs associated with home ownership are going way up. I mean, that hasn't stopped. Maintenance, insurance, taxes, utilities, that's going to keep going up. And that's going to be a problem. And what I see happening in the future is I think more people who own their homes are going to rent out rooms. They're going to, if they have a spare room, to generate income. They don't want to leave their house because they've got this cheap mortgage, but they can rent out rooms, right, to other people. and use that rental income.
So you think your peers in their 60s, they're going to get to a point where, I mean, if we look at the overall population, I mean, people are struggling. A lot of baby boomers are struggling. I mean, they either have their wealth is tied up in the stock market, their pension funds, they're dependent upon this coming Social Security check. They're in these big houses that are, 4,000, 5,000 square foot. Their costs are going through the roof. Their kids can't afford them. I mean, if they were to give those houses to their children, a lot of them, they can't afford those houses.
And like I said earlier, a lot of them are paying Social Security taxes. That's why they can't afford to buy a home, is because they're supporting some wealthy guy who's retired.
So what happens when we get 30 million of these? A lot of people want to say, and we're seeing it. Look, I'm in the trenches every single day in the real estate business, and we're seeing the struggles. We're watching people, they purchased 2 years ago, they can't afford it, they just want out. But what happens when we add 30 million, let's just say, retirees in the next 5 years, 6 million on average houses, existing homes hit the market with the high cost of living? You don't see any kind of implosion? I mean, I'm not trying to coax you into my answer.
They're going to print a lot of money because remember, too, all these retirees are going to stop working. They're not going to pay Social Security taxes anymore, but they're going to collect the benefits. And there's bigger deficits, more inflation, more money printing, which will drive up house prices because it's going to make homes that much more expensive to construct. The materials go up, the labor costs go up. But I mean, in real terms, right? If you want to take a look at housing prices in terms of gold, how many ounces of gold will somebody need to buy a house? I expect a crash. I mean, maybe 80, 90% decline in real estate prices in terms of actual money, real money, but not in terms of the fiat money that we create. That is the problem. The money could lose more value than the house.
But how do the people get the money? How do they get the
Because the government's going to create it. And
they're going to give it to employers?
They make it available, or they have stimulus checks, or however they're putting the money out there, or they lower interest rates so that it can be borrowed into existence. But that doesn't mean that real estate prices can't come down in nominal terms. I mean, they certainly can, and in some parts of the country, they definitely will. I think. I mean, you look at some of the markets where you have really overpriced homes, like California, for example, and you look at the price of a house relative to the average income of the people who are living there. People have really been stretching to buy real estate there. But again, all this problem is the result of the tremendous government involvement in the real estate market. The government should have no involvement in real estate. There should be no Fannie Mae, Freddie Mac, FHA, and they should not be involved in banking because banking is a big part of real estate because of mortgages. There should be no FDIC. There should be no government guaranteed bank accounts. There should be no government guaranteed mortgages. If we had had a free market all along in housing, we wouldn't have any of these problems. Housing never would have gotten so expensive. We never would have had all these booms and busts. People would have bought houses that could afford them. And the people who couldn't afford them would have rented, and we would have a much sounder economy. But everything is screwed up because of the way the government has distorted the market with all their guarantees and all the moral hazards that it has created, and the decisions that have been made that, absent these government distortions, never would have been made. I mean, a free market, people make sound decisions because they're guided by, not only the motivation of profit, but the fear of loss. But the government comes in and tips the scale so that people aren't as worried about losses anymore. And so they just think about the gains. And so they take tremendous risk, which they would not take in a free market.
I've heard you say, that, the debt, some say it's deflationary. And correct me if I'm wrong, but you look at it as more inflationary, because if you have to raise interest rates to, deflate away the debt or to pay for the debt, those costs of higher interest rates are going out to all the businesses, anyone borrowing money. And then that gets built into their product and service costs. I mean, they have to run a business. They need to make money.
I mean, interest rates are a cost of doing business, and higher costs get passed on to the consumer.
But when you talk about, and I'm just, want to get clarification, when you talk about the home prices and you look at, repair costs are going higher, building materials are going higher. When you look at an existing home, don't you think that those higher costs to repair and replace and to build onto will actually, drive the home prices down? I mean, how do they have, when I look at it and I say, okay, forgetting about the pandemic boom, because where we watched just like automotive prices skyrocket, now you look at it and you go, okay, well, they can't sell cars like they could back then, because when you go to repair the car at the service station, it costs 20% of the actual cost of the car to fix it up. I mean, it's going to keep the car prices down.
Yeah, look, you've got, two forces that are counter one another. So number one, the increasing construction costs, labor and materials, means that fewer homes are going to be constructed. And so that keeps a limit on the supply, right? Meanwhile, people are being born, people are growing up, people are wanting to enter the housing market, but there's no incremental supply because the cost of construction is beyond their ability to afford. So now you have to bid for the existing stock. So that's putting pressure up.
But if you can't afford it,
right? At the same time, if it costs a lot to maintain the home, then fewer people will buy. But I think what ends up happening in many cases is the housing stock falls into disrepair. I mean, people are still in their homes. They just don't maintain them the way they did. And so, they deteriorate, they dilapidate, and so eventually they become a teardown. And eventually it can be a problem for the lenders when the properties aren't maintained in a condition that would maintain the market value of the properties. But yeah, that does happen. And of course, people, could stop using their heating or using their air conditionings, or just keep them at temperatures that are not ideal. So maybe in the winter they wear sweaters in the house, right? They turn the heat on, but maybe just in one room at a time. I mean, and again, like I said, people will take on boarders, roommates. That is going to happen, right? So multiple families will be sharing a single house. I mean, you've already seen that. You can see like a lot of in cities, homes that were built as single family homes are now fourplexes, right? So we've already had that, people condensing down.
A lot of what we're seeing, and to your point, I mean, many of the transactions now in the last couple of years have been mom or dad, maybe one of them has passed, and they have the money, and they're buying the house or giving their kids the money for the house, and they're living in, an accessory dwelling apartment, and their kids had the bulk of the house. And, so we are seeing that, which I don't think is a bad thing. I mean, I think that if we get back to multi-generational housing, that could be a good thing.
That also might happen, with Social Security, because, when either we're going to get rid of Social Security or we're going to wipe it out with inflation. But at the end of the day, a lot of children are going to have to take on the responsibility of their parents. That because they're not going to be able to survive on their inflated away Social Security benefits. And so that's what's going to have to happen. Yeah. Instead of having society take care of your parents, you got to do it yourself.
Yeah.
Which is what, I support my mother. And I mean, and that is the way it should be. It shouldn't be like a society kind of thing that nobody has any responsibility for their parents, that somehow the state is going to take care of everybody when they get older. No, I mean, you should, be in a position to save. And if your parents didn't have enough saved for their retirement, you take care of them. They took care of you when you were a kid. You could take care of them when they're older, and then your kids could do the same thing for you. It's not that we should just push off everybody, on the government and assume that, I don't have to be responsible because the government's going to take care of everything. Because when that happens, the government doesn't take care of anything.
Let's talk about gold. I am kind of curious, and you and I have had multiple shows together. Most people really appreciate what you have to say, but we have the naysayers, right? The keyboard bullies, I like to call them, that spout off not a lot of nonsense, but a lot of it's valid. Obviously, you believe in gold. Well, first, I'd like to just ask, how did you get into the gold business? I mean, that's I've always wanted to ask you that.
I mean, I've known about gold since I was a kid, because my father taught me about the Constitution and about real money, sound money. The framers were very much believers in gold as money. That's why they wrote the Constitution, to prevent anything other than gold and silver from being money in the United States. And even though we use copper and nickel in our coins, they were not legal tender. Dollars were either gold or silver by weight, and that's how they were legally defined. It wasn't until really initially Roosevelt, but even more so with Nixon, and even a little bit before with Lyndon Johnson, when Johnson took the silver out of coins in the 60s, and then Nixon closed the gold window in 71. And that's when, we really went off the monetary standard that the founding fathers put us on. But if you go back to the beginning of the Federal Reserve, which predated all that in 1913, that was kind of the beginning of the end. But at that time, gold was $20 an ounce. And it was $20 an ounce in 1789 when the Constitution was first, ratified. So the dollar stayed the same. Gold prices stayed the same. But now, gold's over $2,300 an ounce. The dollar has lost more than 99% of its purchasing power since the Federal Reserve was put in charge of it. And that's a horrible track record compared to the track record for the 100 years before the Fed existed, where the dollar didn't lose any of its value. In fact, it gained purchasing power. Prices went down. Prices were lower in 1900 than they were in 1800. And we had no central bank, but our money gained value. But with the central bank, our money's value has been destroyed. And it's about to be destroyed even faster than it was. It lost 99% of its value in 100 years. It can lose another 99% of its value in 10 years. And so what does that mean? If it loses 99% of its value, prices are going to go up 100 times. So you think stuff is expensive now, add a couple of zeros.
I hope you're enjoying the interview so far. I'd like to take a minute and just let you know that our podcasts are brought to you by none other than SachsRealty.com. If you're looking to buy or sell in Maryland, we hope we're your number one choice. But if you're anywhere else other than Maryland, you can visit SachsRealty.com, click on your state and city drop-down to find someone close to you. This referral program is brand new to Sachs Realty, and if you're not finding someone in your city, feel free to send me an email, and I'll be sure to connect you with someone that I trust. Now back to the show. A lot of people think this is an old person thinking, right? The physical gold or investing in gold, and they think Bitcoin's the answer.
Well, you're not investing in gold. You're holding gold. You're holding gold as money,
right?
As opposed to holding dollars or euros or yen. It's not an investment. If you buy stock in a gold mining company, well, now you're investing in a gold business. So that's more like buying stock. Buying gold is like keeping cash. So if you're going to stuff cash under a mattress, wouldn't you rather put gold under the mattress, right? I mean, gold is going to hold on to its value rather than cash. Now, the Bitcoin people just don't understand what gives gold value. They just assume that gold's value is just a function of belief, that we just decided arbitrarily that because gold was shiny that it had value. But gold's value comes from its metallic properties that are very unique to gold. They're properties that other metals don't have. So gold can provide utility that you can't get from other elements, other metals or other commodities. That's where gold gets its value. But the reason that gold also can be money is because not only can it store that value, because gold doesn't tarnish, it doesn't decay. It holds on to all of its properties, no matter how long you hold it. no matter the environment. I mean, people, ships went down 400 or 500, 600 years ago. And if you can salvage it, the only thing that might still be on the bottom of the ocean is the gold coins, that were in a little case or whatever. And they're as beautiful today as they were 500 years ago when the ship sank. Everything else is gone. Everything else is, decayed, rusted, but the gold's still there. So gold doesn't lose its value over time. So it could be a store of value. But the way gold works, the way it can be melted down, the way it can be made into coins, the way it can be divided and transported, it had all these qualities that made it the best form of money. And a lot of other commodities have been used as money, but none more successfully than gold. The Bitcoin people think, well, we could just artificially replace gold with a string of numbers. All we have to do is limit the supply and call it Bitcoin, and it's going to have value. No, it doesn't. It's just the latest iteration of fool's gold. There is nothing that Bitcoin and gold have in common, because there's nothing that you can use Bitcoin for, or that you need gold. You can't substitute. You can't say, I'm going to use Bitcoin instead of gold to conduct electricity in this computer chip, or I'm going to put Bitcoin into this crown, or I'm going to put Bitcoin into this watch, no, you need gold. There is no ability to substitute Bitcoin in any way for gold. But, anything can have a price, right? Value, utility is one thing, but if people are willing to buy something, I mean, the price is whatever the market will bear. And there are a lot of people who have been conned into believing that Bitcoin is digital gold, and they've bought it. And yes, there is a limit on the supply. And so if the people who own that limited supply don't want to sell and other people want to buy, well, the price will go up. And you've seen that. You've seen a lot of people hodling their Bitcoin, right? They don't want to sell. Other people want to get in on the action, and so they want to buy, and the price goes up. But eventually, the price has to collapse, because the people that got in eventually have to get out. And how are they going to get out? Well, they got to sell. Well, sell to who? Who's going to buy, right? Eventually, you run out of people who are willing to gamble on Bitcoin appreciation. There's no actual use for Bitcoin. So people only hold it in the anticipation of selling it in the future to somebody else at a higher price. So you have to constantly sucker in new people into the pyramid to enable the people who got in earlier to get out. Just like we talked about Social Security as a Ponzi, you got the same dynamic with Bitcoin. But none of these Ponzi's can work, because eventually you run out of the new buyers, and the older buyers want to cash in. They just don't want to die with a lot of Bitcoin in their wallet. They want to buy stuff. They want to buy a house. They want to buy a car. They want to buy new clothes. They want to go out to restaurants. They want to take a vacation. Right? They need to sell their Bitcoin to do those things.
Did you ever say how you got into gold?
Well, I said my dad told me about it, so I've known about it since I was a kid.
But what actually? I mean, what is it? Well, let's ask this. What does it mean to be in the gold business?
Well,
in
the
I
business,
see gold, stores and things, will buy your gold, and you see shops and things like that. But that's not what you do.
Well, I mean, the gold business. Yeah, I started a company, Schiff Gold, and we help people accumulate physical gold. So if you want to buy some gold or silver, where do you get it? Right. Well, one way is you contact Schiff Gold, and we'll get it for you. Some people think, Peter, if you like gold so much, why are you trying to sell your gold? I'm not selling any of my gold. Right. We're just a middleman. We're a retailer. We buy wholesale and then turn around and we sell retail, and we make a little spread. Right. We just like any other retailer. Right. So I'm not trying to get rid of my gold. I actually want to buy more. And I take the profits that I earn by helping other people buy gold, and I could use that to buy some gold for myself. But most of my own money that I've been putting into gold, I've been buying the gold mining companies. because I believe that there's a lot of leverage there. I'm so optimistic on how high I think the price of gold is going to go. I think I'll make more money as an owner of a gold mining company because they own the gold mine. The gold's in the ground. We're going to dig it up and sell it and make a lot of money. That's going to be a great business. See, right now, gold mining is not that great a business because it's very expensive to mine that gold relative to the current price of, let's say, $2,300.
Regulation.
But I think the price could go to $10,000, $20,000. The cost is going to go up, but not by that much. So let's say right now, gold is $2,300 an ounce, and it costs me $2,000 an ounce to get it out of the ground. I can make a little bit of money, but it's not, it's not great, right? Making $300 on $2,000. But what if it goes to $20,000 and the cost goes to $5,000? Well, now you got a hell of a business, right? Look at the margin. It's costing me $5,000 to get the ounce out of the ground. I can turn around and sell it for $20,000. I'm selling it for 4 times what it cost me to mine it, right? I think that those are the dynamics that I think I'm going to be looking at in a few years. So that's going to mean that my gold stocks that I bought are going to have a much, much higher value because the profits that they're going to be able to generate are going to be substantially higher in the future than they are right now, which means they can dramatically increase the dividends that they're paying me. And that means if somebody wants to buy that stock, they're going to have to pay a lot more to get that stock because of all the income and the dividends that the companies are paying.
Is there anything politically or geopolitically that would change your opinion on gold? I mean, some people say, well, they'll make it illegal for you to, if it really collapses, implodes.
I don't think there's anything that's going to happen politically. Maybe the one wild card could be AI to the extent that it can unleash a massive increase in global productivity, such that the price of everything collapses because of massive increase in supply. That could be negative for gold. Gold might go down less than a lot of other goods. And so on a relative basis, you still might be better off. But I think if gold is undermined, it's going to be by the free market. It's not going to be by the government. I mean, the government is going to do everything wrong. I mean, I'm confident of that, right? I mean, nobody is going to make any money betting that the government gets it right, because the government never gets it right.
But you don't think they'd make owning it illegal?
Well, they could do that. They may. And in fact,
you have a certain date to turn in your gold.
Yeah, in fact, and they're only going to do that if the price of gold goes way up, right? They're not going to do it where the gold price is right now. But if we do have a monetary crisis, if the dollars crash, gold's $20,000 an ounce, and we're having riots in the streets and food shortages and blackouts and all this kind of stuff, and the government is desperate for hard money because they can't print gold, right? Yeah, in that environment, they may try to confiscate it. But it's not easy to do because they how do they know you have it? Because it's physical gold. They don't know what you got. Even if somebody bought gold from Schiff Gold, assuming that they could get our records, they have no proof that the buyer still has it. Well, I lost it. It was stolen. I don't know. I buried it in the ground. I forgot where I put it. I don't know. I mean, how do they know?
Yeah. Wouldn't you think AI would enhance the need for gold? I mean, at least it's physical.
Well, we probably will need a lot of gold to increase, the compute. Building all these GPUs and all the resources. I mean, AI is going to be ultimately about resources, right? Because it's going to need tremendous resources to create the things that it may be capable of creating unless at some point it's able to create gold, figure out a way to, produce it out of something that isn't gold. I don't know. But yes, I mean, right now AI is increasing the demand for energy. I mean, it's very expensive to power the computers that makes the AI work. So in the short run, it's pushing up prices because there's not a lot of output right now, but they're sucking in a lot of input. But that could flip at some point when AI really starts working its way into production, so that we can produce more stuff with less labor. Ultimately less material, but initially we'll probably need more material. The costs that we get rid of are the labor, because we get the computers to do what humans used to do, both on a cerebral, where we can eliminate a lot of the thinking work to eventually the manual labor. But now they need a robot or something that can move. But once you can put an AI, intelligence into a cost efficient robot, now you can start eliminating a lot of manual labor. And it's not so much, you're liberating the labor because now the people don't have to do it anymore. And now you have the potential to have an unlimited labor force. Your labor force is not constrained anymore by the birth rate or any of that. If you could just make robots and then the robots make more robots. But, I don't know how far into the future all this stuff is. But I have a feeling that the financial crisis, economic crisis will come first. So I think we have that to look forward to at some point. But in the shorter term, I think we have a dollar crisis, a sovereign debt crisis. I don't think that the AI, get out of jail free card is going to turn up in time, but it's possible. As I said, that is one wild card that may end up, buying more time. But I just don't see that, well, the government's just going to act responsibly and we're going to massively cut government spending. We're going to allow interest rates to go way up. I just don't see politics allowing that.
When I was at your house in Puerto Rico, I met David Tice.
Yeah, he's a good guy.
Yeah, Grid Down, Power Up. And also I podcasted at your home with James Hickman, and known as the Sovereign Man.
Yeah.
What are you working on with him? I mean, back then, maybe you could talk about it, but I know it was kind of like secretive. You and James were working on
I've known James for a while now. And in fact, I knew him when his name was Simon, right? Simon Black was his pen name. Right. I guess he thought that one was a little bit more mysterious than James Hickman. And so he's had a letter that I used to read at Sovereign Man, Notes from the Field. You would put out his and a lot of his commentary or his writings would show up on like a Zero Hedge or different other websites. But last year we decided to merge our social media, newsletter publishing businesses together. And so we rebranded Sovereign Man, Schiff Sovereign. And so that's the new website. And we now are putting out a lot of content. We're going to start putting out even more content, joint content between the two of us. I've never really had a newsletter that came out this often. We have almost a daily free newsletter that comes out that people can sign up for by going to Schiff Sovereign and just putting in a little information. You'll get the free newsletter, but we also have premium products with a lot more information. We get into things, like estate planning, asset protection, dual citizenship, Plan B strategies, different ways to prepare for, all sorts of, black swans or things that could happen. That it's better to be prepared for. And we also have we do investment picks, and we bring people access to different ideas or different opportunities. We do a lot of events around the world. We had a great one down in Mexico City. We had the former president, Vicente Fox, who spoke to us down in Mexico City. I hadn't even been to Mexico City before. And had a really good time there. But our next event is going to be in Dallas, Texas. I think it's going to be November 9th, a couple of days after the election. And our keynote is Senator Rand Paul. So he's going to be there.
Who you know very well.
I know Rand. I know his father. So he's going to be talking. And I know I got Larry Elder coming, who was also involved in politics. I want to have the theme is going to be a lot of politics because it's going to be just a couple of days after the election. But we'll also be talking about investments and other opportunities. It should be a great event. If people are interested in learning about it, actually the event is only for our Total Access members. So in order to come to the event, you need to join Total Access. And there's information on how to do that on the Schiff Sovereign website. And I think that when you're a sovereign member, you do have to pay the cost of the conference. I mean, it's not free because it costs money to set it up. We basically kind of break even on the conferences because the money that we collect goes to cover the cost of putting it on. But I think we're going to be including the cost of this conference with the membership of Total Access. But I think we're also going to have an online event, which will be available to the general public. You won't have to be a member of Total Access to participate online. But if you really want the experience, you want to be there in Dallas. And I think a lot of it, too, isn't just to spend time with me, to spend time with James, to spend time with Rand Paul, but to spend time with the other members. Because that's one of the things that James has really cultivated over the years with Total Access is the opportunity to network with the other attendees. Because there's a lot of quality people from around the world, not just around the country, but around the world that come and get together, very like-minded people. And you can meet some good friends. You can get some good business relationships. So I think a lot happens just among the attendees. And then, of course, you also get the interaction with the speaker. So you kind of miss out on that if you just listen to some of the presentations at home. It's still worthwhile to hear what people like Rand Paul have to say and other people that we invite to speak or listen to me. But a lot of other people also like to be there in person, to go to dinner with us, other entertainment things that we organize for the group to take part in. So it's a real shared experience. So you're learning. You're meeting good people, but you're also having a good time. So again, I think it's November 9th. Schiff Sovereign is the website, schiffsovereign.com. And at a minimum, just sign up for the free letter. I mean, a lot of my people who were already, on my database, I sign them up for it anyway, right? Because it's free. And if they don't like it, they can unsubscribe. But if you're not now getting it, then you want to make sure and go to Schiff Sovereign and put in your email address and whatever other details. We don't ask for much. And then you start getting the letters. Pretty much every day we send you something. Yeah. And it's valuable. It's good. It's a good read. I look forward to getting a lot of it myself because, a lot of it is, James is writing.
We'll drop all those links in the show notes below.
Yeah.
It sounds like you're ramping up. I mean, is there a slowdown in sight or Peter, you're involved in so much and you travel and do all these speaking engagements.
Well, it's mainly just Schiff Gold. And my asset management company, Europe Pacific Asset Management. Those are my primary businesses. Now I'm doing this thing with James, but I was already doing I was already doing my podcast. I have my YouTube channel. I have my, my Twitter and my X and, Instagram. So now I'm kind of loading that up into a company, to help really grow it more, to get more, people following me and James is a great guy to team up with because he's quite a bit younger than I am. So somebody that can kind of carry on my work because we think very similar to one another. And so if I'm not able or I'm old or whatever, something happens to me, he can, carry the torch and continue bring this message out.
Yeah.
I don't know how much longer we actually need to do it, though, because I think we're very close to everything collapsing.
Right.
But, there'll still be more to do, even in the aftermath. I'm looking forward to the I Told You So book. I've written a lot of books about predicting the crash. I need to write another one about,
right.
about how to clean up the mess.
You need more conspiracy.
Pick up the pieces, because
everything came true, right?
Well, the conspiracy theories. Yeah, I am, trying to limit, what I do because, I'm 61 years old now. And so can't work quite as aggressively as I did, when I was younger. So to have a partner that can do some of that stuff, for me. And, I'm making more passive investments though. I've noticed that recently I put more money into some, early stage companies and doing some other investing. But a lot of that too is, for my kids, just make some of these investments.
Yeah. As we kind of wind down, is there anybody, who do you look up to? Who, what type of mentors? Who do you listen to? Do you listen to other podcasts?
Yeah, there are some other good ones out there, and I wish I really had time to listen to everybody else.
Anybody in particular stick out?
Well, you mentioned, Ron Paul was a hero of mine, and I started supporting him, when I was in my 20s. I think, he was congressman from Texas. I voted for him too when he ran for president against Ronald Reagan. I liked Reagan when he first ran, but I was very disappointed in Reagan after his first term. As much as I liked the guy, I was like, he didn't get rid of the Department of Energy, the Department of Education. He was signing on to government spending with Tip O'Neill, and that was, it was bothering me. It's like, why can't you, cut government like you said you were going to do? And if it was hard for Ronald Reagan to cut government, imagine how difficult it is for anyone else. But I have some economists I like. Also an economist I really liked who became a friend of mine, passed away a few years ago, Walter Williams. He was a great guy and very underappreciated economist. But there are other, Austrian school, hard money guys, that haven't, gone off onto the Bitcoin tangent that are out there who, who I still like to follow. But I pretty much, kind of call things the way I see it on my own, and kind of, I don't spend that much time, on other podcasts, because I'm spending so much time on, my own stuff. Yeah. And then, I want to have some leisure. So I have to let my mind, get a break and just, do some things that aren't necessarily that, thought. Like, my wife always wants to talk about, politics and these things. I'm like, look, can we just,
I do that on your show.
Yeah, let's,
bring her on.
I know she could have her own podcast, but she's actually working on a band. She's very talented. Before we married, she was a stage actress. She was doing theater in New York, and so then we got married, and she wasn't doing any of that. But she was also very talented singer, songwriter. And so I had a fan that reached out to me who was a musician. He actually was the initial guitar player in Third Eye Blind, and he was a Peter Schiff fan. And so he had reached out to me. Yeah. And so I forget how I ended up introducing him to my wife, but then they started collaborating on songs. And so my wife wrote, I think she has 11 songs. She wrote the lyrics and sings the songs. And he composed the music and, plays guitar. And they have some other people that play other instruments. But all the songs are ready to go. They're in like an album. And their band is called Laughing Cats. And I think their strategy is going to be to release the songs individually. It's a whole different world now. I mean, if this was, 20 years ago, they would have had a record deal. I mean, their songs are really good. They would have a label. They would be, their records would be out there. I'm sure they'd be on the radio. But it's a very different world now than it used to be. And so
you don't need a label, right? I mean,
no, you don't. But it's like it in a way, it's easier to make money. In a way, it's harder. But it's very different, right? And so they're going to release a single from this album that they've already created. And I think the song is Get You Back is the title of the song. And it's going to come out in early September. Forget the date. I'm going to mention it on my podcast, but they will be on Spotify and iTunes. But I mean, I've been hearing these songs now for, at least a year, because she keeps playing them and singing them and trying to make them better. It's like a constant work in progress, but they're very catchy. They're all very popular type songs that are written, popular to just, So I think they're really good. I mean, I think she could have sold the songs to a bigger artist, because I think they're good enough that, she could have sold them, but she's sung them herself. And so maybe, who knows, Laughing Cats, maybe this thing will take off, and she'll turn it into a real business. But I think what we need is I need people to listen to her songs. download them or listen to them on iTunes, Spotify, and then share them with their friends.
Definitely.
And when we were in Europe, we bought a boat, which is it's a solar powered catamaran, and so we named it the Laughing Cat after Laughing Cats.
Yeah,
cool.
Yes. Right.
That's part of my plan B. That's what Lauren was like. That's my wife's name, Lauren Schiff. She was the instigator because she wanted me to get a bunker. And then she was like, well, what about a solar powered boat, which at least we could use the solar power
escape.
Yeah, because we just go out in the ocean. We have an unlimited range. The boat makes its own water, makes its own power. So we can kind of be self-sufficient. Of
course, with all your gold.
Anchor off of St. Bart's.
You need a gold anchor.
Right. Yeah, no, we don't want to carry a lot of gold on the boat, but we do. Yeah. But we will have some. We do have a safe on there.
Right. Well, Peter,
but
I know you're busy, and I really appreciate you carving out some time for me and for our audience. And I wish you the best with everything, and safe travels back.
Yeah, thanks a lot, Todd.
Back to Puerto Rico.
Always appreciate the opportunity to have a chat with you. You got a great audience, and your podcast is just getting more and more successful. So I congratulate you on that.
Thank you.
I'm sure we'll talk again. Maybe back in Puerto Rico next time.
That'd be great. Talk to you soon.
Okay.
Hey guys, thanks for watching. If you haven't already subscribed to our channel, please consider doing so now. Hit that alert bell and you'll know every time we upload content just like this. And if you enjoyed the video, you can let Peter and I both know by hitting that thumbs up button. That actually will help to share this video through the algorithm with more people. And I love reading your comments and questions, so please feel free, take a minute, drop them below. And one of the biggest compliments that you can give me here at Sachs Realty as your host of our podcast is to share this video and our channel with your family and friends. Together, we'll build the most amazing online community where I try and bring you the latest information on what's going on with the U.S. economy and the housing market. See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.